Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to Thursday's recap. My actually last recap for about a week or so. I will be heading to Eastern Europe to do some coaching and meet a lot of subscribers because we do have people that use our resources and tune into the morning call and the recap. I note all of our products from around the world. So every now and then I do go out so I could do some one-on-one coaches, group coaching, so they could learn a little bit more, so then they could use our resources a little bit better. Well, anyway, so I will not be here for the morning call or the recap for probably about a week. I leave Saturday night, and I come home the following Monday, and it's 7 hours in front or so. But with all that said, today was an interesting day. The futures were up like 13 handles when I woke up this morning at like 4:45, and by the time I got into work, they were only up 5 or 6. People were saying we were up because the oil was up because of the fire, or it could have been because we were, minus 50 on the oscillator, and whenever you get minus 50 or so, it's harder to be short, but, things I guess feel somewhat broken that, you have to be a surgeon to make any money long also. So that means we're in this, environment where you have to be that much more careful. And we started talking about being careful over 2 weeks ago when all those tech earnings started to miss, when Google missed, Microsoft missed, IBM missed, Netflix missed. You're talking about big holes in a lot of stocks. Twitter, which has been horrendous lately anyway, broken. Starbucks broken. Nike doesn't look good. Under Armour kind of broken. Like there's so many broken names that it's hard to sink your teeth into things and be so anxious about missing out on trades, at least to the long side. But again, you can't just blindly short. So let's just get into the charts. Overall, here's a chart of the S&P. Now, one of my rules, which we talk about all the time, is when you're above the 8 and 21 day, which is what we reclaimed right here after the double bottom, you try and be long. You try and have a portfolio approach. You try and look for strong stocks. You try and ride the trend. Well, that trend above the 8 and 21 day went on for quite some time, didn't it? It went basically from this 1925 all the way to this doji top here at 2111. That's a lot of handles. A lot of handles. So when you have a certain trend intact, you ride it. Okay, but once this trend broke right here and we lost 2081, that was your time to say, okay, let me change my style a little bit. Let me look for some more shorts. Let me be able to press some shorts, and let me be very tactical on my buys, because we are no longer above the 8 day, and we are now, after this move, we were comfortably below the 21 day. So what does that mean? Doesn't mean game over for the market. It just means that the same momentum that was in this market for this time period, okay, from basically February 24th all the way up to about a week ago was, it changed. And now, you look here, okay, not much of a rally, today. I thought we would have, maybe came back up. Like, remember last time on the bounce, we came up and tested the 8 day and we tested the 21 day. Well, today we didn't have that. So maybe we'll see what happens tomorrow with the jobs number. So, here is resistance 1, which is today's high of 2060. And then now you have, the resistance right there, which is about 2066. Here we were above. Now we're below. So that's how, you switch your trading around. And now the question is, if you look at the pattern here, which I put on Twitter, you can look at, we now have a left shoulder, a head, and now, are we creating a right shoulder to then have this as our neckline? And if that's the case, from this to this brings you through the 200 day actually down closer to this prior breakout, which is around 1990 or so. So, in order to get here, you have to get through the 200 day and you have to get through the neckline, and the sellers need to keep you below, 2070-ish. So lots of ifs, but it's something to consider. What gave us some clues? The Qs. The Qs gave us clues. You had to be careful. Technology usually leads the market, and this led us to the downside. Here is when your upper support broke. This is when your 8 day broke, and this is when your 21 day broke. So if you would have gotten out of the Qs or changed your stance once we were below the 21 day, which really was below 109, you saved yourself almost 4 points to the downside. And now look, here you were above, since remember when this reclaimed it on that same day, what was it, February 24th? You were above the 8 and 21 day all the way up to about 112. Okay, now what are we doing? We're below the 8 and the 21 day until that changes. And now at this point, this is your point of reference for tomorrow. You have today's low 104.81. Sometimes, you get some kind of red dog reversal washout, and then you see some kind of rally back up, or sometimes you break below and you continue to the downside. But technology right now is leading us lower. And if you go, why is technology leading us lower? Look at Microsoft. Big ascending channel, broke to the downside, big hole, never filled, still below the 200-day. Netflix, big hole in the chart. Okay, I put all these on Twitter, by the way, and we've been going over them in our recap in the morning call. Look at this hole, never filled it, showing you weakness. Traded below the the post earnings low, and now it's still just below. Look at it, below the 8-day, below the 21-day. Remember when it was trending and it was still choppy? It was above the 8 and 21-day. Well, here's when it gapped below, never reclaimed it. That creates a new trend, and that's what we look for. We look for trends. When stocks are below the 8 and 21-day, you try and sell strength. You maybe catch a little bounce red dog reversal trade. You look for those H cell setups, and that's the that's the box we got to live in. I like to hold 6-7 names. I love when they break out the 52-week highs. I like to add. I like to use a tier system. It's not on the table right now. Right now we have to be careful, selective. You have to short rallies with some care and look for an H cell setup. And maybe from time to time when you get very oversold, you buy into support or into a red dog reversal until something changes again. So what else? Okay, Amazon, kind of tricky today. So I want to talk to you guys about how you could, lose less money if you're long, or how you can make adjustments quicker. So this was your gap up on Amazon. Okay, here was that second day trade. Then it was kind of like a trap, but the inside day below, it didn't gap up. But anyway, so today Amazon was above the prior high. Okay, so I write that on my morning note every day. Amazon, my verbiage was probably like, Amazon is still considered best in breed, opening above yesterday's high of 674. See if it holds it, meaning if you're long it, you sell some strength. If it breaks back below it, you reduce. Then the next spot I reduce is when it goes red, because you never know how low it's going to go. And not only did it go red, it took out the prior low here, and now it seems as if it's very important that this holds. Otherwise, this gap comes into play and momentum gets lost. Facebook did the same thing. Facebook, now created a bit of a topping tail. I was long it overnight. I'm not long it now. It tried to get above resistance for momentum and didn't hold. Doesn't mean it won't try again at some point, but it traded above this 118.30, put a high in at 118.98. You could have even used this spot, which is sometimes which is even higher. It went above 18.73, couldn't hold it, and then traded back below. And then that was your sell. And then when it went red, you could have got flat, because now you don't know what's going to happen here, because you have a gap that is being protected, which is keeping the momentum there, and you could stay as long as that's the case, but you better be careful if it breaks that spot. I'll show you an example. Under Armour could do no wrong, right? Everyone loved it. Okay, looked really good right here, right? You had a big gap up, you had a nice little flag. I know there was news associated. It was above the prior resistance, above the 8-day, looking like it could set up on this flag to continue higher. And then what did it do? Boom, broke into the gap with a wide range bar. That was your out. That's what you have to do as a momentum quick active trader. When things change, you change. Some guys maybe even got short, because they said, oh, it's going to fill the gap and I'll play it for that. But at least if you got out because you were playing it for it to hold the gap and continue higher, and it changed, you changed, because look what happened next. Okay, yes, this kind of could have been painful if you bought this day and said, oh God, I got to stop myself out here. I didn't want to do that. 45.82, I didn't want to get out of here. I wanted to buy it above 48 and sell it at 50. You know what? It didn't happen. And then look what happened. Boom, 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 all the way down. So when these gaps, when these pro gaps turn into exhaustion gaps, you got to be careful. While I'm on that story, people are talking about Nike. You know what? Nike, to me, I know it's a blue chip, awesome name, and they got great sneakers, but it's hovering on big support below all these moving averages, below the 200-day. That's not healthy looking, so you better be careful there with Nike. You better reclaim this fast, otherwise, you know what? Get out of Dodge. One thing that does look good is Disney. I know Sperling's in it. Sperling's, Disney's been very good to us. The Jungle Book has been great. Captain America comes out this weekend. This is when I listed it. It was a great buy, and now it's consolidated and closed above the 200-day. If you had to be long something overnight, this looks okay. But I don't see many charts that look like something that's so compelling to be in. Apple, for instance, this macro chart with a buyback and it going ex-dividend still didn't, get many people so excited. And on top of it, Jim Cramer, going back and forth with it on Mad Money. So you better be careful here. Apple itself is not looking so healthy. This is short-term support that it's hovering on. It's not the easiest short either. I know some guys have been trying to short it and it bounces when the buyback machine comes up, et cetera, et cetera, et cetera. But this spot right here, if that gives way, look what you're looking at here. Look at this macro pattern. You're looking at a big-time head and shoulders top pattern where, here's your 92 from the flash crash low. Remember that? Okay, well, it connects all the way down here where it trades below this spot. You're going to be seeing, I would think you would be seeing this, 80, mid-80s pretty fast. So you want to take some caution there, and if that's the case, the market's probably in some serious trouble. I remember I traded this trend, and this trend was fun until it broke the 200-day, and this ascending channel so got me out way before this nonsense. So now you have to see what's next. Lots of dangerous type scenarios, but money to be made. I know I wasn't thinking short Tesla today, but I remember I said, let's see how much of the gap Tesla holds. And you know what? Tesla did not hold any of the gap. And, if you shorted the open versus a 15-minute high, you got paid. Okay, but, if you tried to buy a dip thinking that, okay, they're 2 years early on their 500,000 cars, I love this story, well, you got ran over. And now look at it. This broke prior to earnings. That was your momentum move to the downside. Now this just broke below the 200-day. So momentum stocks are great when they're above the 8 and 21-day. Did that break? Yes, right there. That's when the momentum changed. Momentum intact, momentum leaves, sell on earnings. Better be careful now. Maybe you get a little red dog reversal or something tomorrow around this pivot, but now you should not be trusting it and just blindly buying it. Not saying you could do that here either, but changes. Things always change. And that's our job, is to figure out when slight changes happen before the rest of the street realizes the bigger changes that are going to take place. So with all this said, I feel like the market has pulled off almost 55 handles from the highs. Feels as if we're oversold, but we're having a hard time bouncing. We have a jobs report tomorrow. I don't even know what the market wants. I feel like some Goldman saying it's going to be a hot number. When did they ever give out a free lunch? And even if it's a hot number, what does it mean? I think the market kind of wants better news versus bad news, because if it's a bad number, after everything that's been thrown at this tape by the central bankers around the world, including ours, people will be like, there's nothing that we could do anymore. And then the market could go lower. I think in line, maybe we continue this correction, but it doesn't gain too much speed. But all in all, I'm flat into it. Tomorrow morning I'll be trading from Short Hills, and then all of next week I will be on the VTF for the first few hours, but someone else is going to be writing the note for Redler All Access. Not someone else, Cooper, who's awesome. There will be either, I don't know who's going to do the morning call. It could be Cooper, it could be Smith, it could be DG, it could be a lot of different guys, Sperling. So make sure to tune in, but you will not have the red dog for the next 7-8 days, but I will be connected somewhat. So I'm hoping to be back here like this next Tuesday, Wednesday with some stories to tell and meeting a lot of great people, like-minded people around the world. And I'll see you then. Bye-bye.